Hello, friends. Today, I just wanted to give a market outlook on what has happened in the market in the last 1.5 years and why the market is going through a tough phase. I'm talking about the equity market. So, if you look at on the valuations perspective, we are slightly uh, on the higher side compared to the other emerging markets, something like China, which has experienced much lower valuation from COVID till 2024, but that market has gone up. Similarly, some of the emerging markets like Vietnam or Indonesia, South Korea, and others. So what has happened is most of the foreign institutional investors have moved their money from Indian equity market to other emerging markets because of the higher valuation. And we had a very good run from 2020 to 2024. But in 2025, the earnings growth has not happened. If you understand why that earnings growth has not happened, one is because this 2025, the 24-25 happens to be a election year. So some of the uh, incremental expenditure which the central government has planned on infra could not be done because of the election compliance and other things. So there was a slowdown which has happened. And what happened is that the private consumption, privates also not increased their capex in the last year due to the commodity prices and other various things. And in the last 1 year, if you look at, there is a increased penetration of AI across different markets, whether it is on the US market or on the Chinese market. So most of the investors are looking to invest in those markets which are already spending more money on the AI infrastructure, where which India has actually lost out, which is a big challenge. And second thing, from 2000 to 24, when the equity market has gone up, the Nifty earnings are also gone up. Whereas in the last 1 year, the Nifty earnings or the broader market earnings have not come down. So that is also a challenge. So we had the slowdown which has happened. Look at the positives from now on. What this year the budget has done is that Indian central government has reduced the income tax slab. That means up to 12.75 lakh, nobody has to pay any income tax, which will increase the consumption. And GST rationalization, which has happened prior to September, October, which is also helping because lot of discretionary spending is happening. And India is an economy where 65% of the population is less than 30 years of age, so that the consumption is also gone up, aided by a wonderful lower interest rate because our macroeconomic fundamentals are good and RBI has been very supportive to the government by reducing the interest rate because our inflation is also low. So now you will see the incremental spending which is happening, especially on the domestic consumption side. That is one major advantage we had. And also, if you look at the investments from the central government side is also happening on the infra projects across the country, whether it is on the roadways and railways and others, right? And also, we have been focusing more on decarbonization. So, a lot of thrust on renewable energy is being done so that it will help us to become self-reliant. So all this has also factored in where the Moody has upgraded India's rating, the sovereign rating, and among the top 10 economies, India is the fastest growing economy. So the only challenge what India will have even this year will be the export services because which is being affected due to Trump tariff. But what our central government is doing is they are having bilateral agreement with various countries, whether it is on New Zealand, whether it is on with UK, which is already there, and now that European Union has also said that they wanted to have a bilateral the agreement with India so that. They are also moving away from China plus one policy, which is a huge positive. So, as an equity investor, you need to be disciplined, and equity market never goes in a straight line. It is always through volatility. But as the earnings growth is quite good and India's domestic consumption has started doing well, you need to stay resilient, and these are all the time to accumulate more units so that which will eventually help you when the market goes up because NAV into number of units will be your value as far as the mutual funds are concerned. So always focus on accumulating units, stay calm, don't worry about the geopolitical tension, don't worry about the tariff. Your goal is much longer. Stay disciplined and it will help you to reach your financial goals. And we are here to handhold you, help you, and ensure that you reach your goal on time with the best possible solutions. Thank you.